Hey, what's going on, everyone? My name is D. Anthony with Evolution Traders. Hope you guys are all enjoying your Saturday. But as you know, we are always constantly working, especially at Evolution Traders. And as a trader in general, you should definitely be back testing your strategies over the weekend. You should be going over some of the opportunities that maybe you missed, some of the opportunities that maybe you did very well on, and just in general kind of go over what happened this week so you can be ready for the next week. Now, bulls are still large and in charge, yet continue to push higher. And what we're looking at here is the 5-minute time frame on the NASDAQ. Now, what I want to kind of back test here is a couple of the entry strategies that me and some of the guys in Evolution Traders are trading, some of the things that we're kind of waiting for, looking for, this, that, and the other. So I've got a few things on my chart. We've got the 20 period moving average, which is just a 20 SMA. We also have overnight session highs and lows coming into the day on Friday. And then we've also got that opening range, that first 30 minutes after the market has opened, which is the green line you see on the screen and the red line. So you guys already know that I like to take breakouts confirming those first hour highs, that first opening range break. Now, if we kind of look here, we actually started to break through 6:55, 7 a.m. We broke through that opening range here, immediately pulled back into this 20 SMA. Now, if you did take this breakout, whether it was on the first move or whether you waited for the new high to be put in and then the confirmation of that new high to be put in, you have to automatically be assuming that you need to take profits into overnight session highs. Now, why do I say that? More times than not, I have seen traders get really good entries, go green, and then we kind of sweep these highs and then the market pulls all the way back and then give those profits back. Now, if you want to hold a runner, that's completely fine. And I would definitely recommend to, start trying to work on holding a runner. For example, if you trade 4 contracts, sell 2, sell 3 into supply. Hold that one contract to see if we're able to get more, kind of just move your stop loss to, somewhere around break even and see if maybe you can capture an all day move like you would have had on Friday. Now, just to kind of, go with the narrative, well, what would have happened if we would have confirmed that opening range low? We did have the overnight session lows just a little bit below it, but this would have been a perfect opportunity. If we would have put in this low, bounced, consolidated, and then lost the opening range here, I would have definitely traded this to the short side as well, taking those very quick profits into the overnight session lows, and then continue to try to hold to see if we were going to put in a new low, back test, and then continue with the trend downwards. So again, you also had a 20 SMA play here. The range was 35 points. Again, did confirm, did put you in about a 20-point drawdown for about 10 to 15 minutes. Again, that's why I say position sizing is key, right? If you go in with 5 mini contracts and you have a trade to go against you 20 points, you're going to be under a tremendous amount of stress and pressure. However, you take 2-3 micro contracts, you're down $100, couple $100. It's nothing, right? So again, position sizing is everything because it really helps you control your emotions when you're in the trade, and it allows you not to sell out of a trade too early because you're fearful that the trade might lose. Look at guys, before we even take any type of trade, we're already accepting and have accepted the fact that we are going to lose X amount of dollars. So for in this particular example on this 20 SMA play, it's a 35-point range. If I trade 1 micro contract, I'm prepared to lose $70 and I'm okay with that. If I trade 2, that's $150. If I trade 3, that's looking at about $225. So if I'm in drawdown or it's pulling back against me, why would I be upset? Because before I even click the buy button, I was okay with losing, whether it was $75, $150 or $200, depending on how many contracts you're playing. I was already okay with losing that. Does that make sense? So again, just because a trade sometimes does not work in your favor, does that mean that you have to get upset or something went wrong? No, not every trade is going to work. So get comfortable with your position sizing and make sure your position sizing is at a point where, when these trades do pull back and you're in drawdown, it's like nothing, right? You shouldn't be upset. You shouldn't be, kicking your, shoes around in the dirt because, something's not going your way and throwing a temper tantrum like a child. these things are going to happen. In this particular case, it does pull back about 20 to 22 points within, the first 5 to 15 minutes after you get into the trade. However, it does explode into overnight session highs. It confirms overnight session highs and continues to run. Would have been a fantastic trade. You at least bare minimum would have taken at least 35 points off the move. So again, depending on how many contracts you would have traded, it would have been, $70, $140, $200, so forth and so forth. You guys can do the math, but it was a winning trade. And if you do get into the practice of holding those runners, for example, you trade 3 micro contracts, you sell 2, and then you hold that last one, maybe get another 10, 15, 20, 30 points, the P&L can really start to compound over the course of a week, 2 weeks, a month, 3 months, a year, so forth and so forth. So just kind of wanted to go through this. I like to do this on the weekends. I like to do this after hours, but I really like to look at the price action. Where were we trading at pre-market? This was a short setup that, paid pretty good at a 1-to-1, 16 points here before the market opened. Maybe, if you're up and you're on the charts, you try to put this trade on for small risk. Again, make sure your position sizing is adjusted accordingly. But again, don't be scared to take trades before the bell. Don't be scared to take trades, right after the bell. And don't also be feeling FOMO when you're sitting on your hands for 30 minutes or an hour or 2 hours waiting for a trade opportunity. Guys, you're going to get trade opportunities every single day. Are some days going to be a lot better than others? Of course. Are some days going to be very, very shitty setups that confirm and have no follow through and stop you out? Yes, yes, yes to all of the above. But it's our job as the trader to make sure we're on top of our game, not only mentally, but strategy and trade plan wise, because the first thing that our job is to do is to manage risk. If we cannot even manage risk, the dollar amount on the screen in your P&L is completely irrelevant. Hope you guys enjoyed this video. Make sure to like, comment, and subscribe, and I will see all of you guys on the next YouTube video.